Today's consolidation was not unexpected based on a good strong move in the Dow, but notice where it moved to, right to the top of this potential sideways resistance level. Tomorrow's trading will be indicative of which direction they will take it. If they open it lower, there's a good possibility that this acted as a resistance level, and now we have to see whether they're going to pull back at least to the T-line. A pullback at this point would not necessarily indicate a reversal because our stochastics are still heading in an upward direction, indicating that there isn't a overbought condition at this point. This also allows us to take some profits based upon this price move if individual stock prices start to roll over. The fact that the transportation index is still in a nice fry pan bottom, did a little consolidation today, also indicates there isn't any real mass selling going on in this market as of yet. Utilizing reoccurring patterns such as the scoop pattern as we see in Lexmark put us in the right position at the right time, both for stock trades and option trading, that this scoop pattern has a expected result, which is a slingshot effect coming out of the pattern. We might not know why this is occurring. It's just telling us that something on the underlying investor sentiment is that they've turned very bullish on this type of with this type of pattern. Today, Lexmark announced that they have paid out their dividend, and they are still looking for alternatives as far as liquidating the company because they think it's worth a lot more. This obviously enhances the price move. This, knowing what a pattern development does, at least puts us in situations. We may not know why a price is moving. We just know that we're looking at the accumulative knowledge of the buyers and sellers creating another reoccurring pattern. During this time where the market's been moving up but kind of sideways for the last month or so, you can see what gold prices have been doing. This is a big fry pan bottom. There's analysis that can be done in a pattern within a pattern. Notice down here, this was considered a fry pan bottom when it broke out through the 50. Then we just use our simple analysis of what a normal trend will do, that once they break through a resistance level, they'll come back and test it as support. In this case, when it came back and tested the 50 after breaking through, gold prices did a bullish harami, then a doji sandwich, which told us there was more upside, making the 200 the next likely target, and then making the top of the fry pan bottom the next likely target. It broke through, and notice when they pulled back to the T-line area, the price that they pulled back to was exactly smack dab at the same price that this whole pattern started. This just allows a candlestick investor to see where support and resistance levels are and what occurs from those points. At this juncture, like we had this little J-hook pattern, now we have another J-hook pattern in progress, implying there's probably some more upside in gold prices. And knowing that gold prices are moving up gives us a much more clear indication of what's happening in Nugget, the gold miners 3 leveraged ETF. We could be buying right here on this breakout, had very strong profits, pulls back right to the T-line, back up through the resistance level, indicating there's probably more upside in Nugget based upon more upside in gold prices. All this is just graphic analysis based upon what human reactions are or human investor sentiment does time after time, just putting us in the right places at the right time. That'll be it. We'll see you in the chat rooms.